You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome to the show, Gary.
Thanks for having me on again, Jim.
Very interesting right now, taking a look at all the charts. Everything seems to be going up more or less together, the equity markets, oil, gold. How often does that happen?
Well, actually, if you look back over the last 16 years, that has been the norm. I know a lot of people have kind of gotten into this mindset over the last several years that if stocks go up, that gold has to go down. But that has not been the norm for most of the last 16 years. From 2002 to 2007, gold stocks, oil, all went up together. Out of that 2009 bottom until the 2000 top, gold, oil, stocks all went up together. And it wasn't until 2013 when they started to attack the gold market that things started to diverge. But I'm of the opinion that we're probably going to go back to that normal correlations where everything goes up together.
Is there a way for a person to take advantage then of both gold and the equity markets at the same time? Because people seem to think they're kind of exclusive.
Well, in my opinion, I think you could have a little bit of money in everything right now. You definitely want to have some money in gold. That's where the big moves have been. That's the sector that got beaten down the most, especially the mining sector. And over the last 4 weeks, we've seen a 65% rally in miners. And I kind of knew that was coming when the bear market ended. I expected the first stage of the baby bull to be pretty aggressive. And I don't think it's over yet. I think we probably got another leg higher here after we consolidate or correct a little bit. But I also like the stock market. Specifically, I like biotech. It's had a nice correction, pulled back to the 200-week moving average. I think biotech is probably ready to move and may outperform the general stock market. And I also like oil. At the recent bottom, when oil made slightly lower low, I believe it was down around $26, the energy stocks did not follow oil lower. They did not confirm that low, and they also did not follow the stock market. The stock market also made a lower low, and the energy stocks were not confirming that. So that's a positive sign in my opinion. So it looks to me like oil has also bottomed. So I think you can have some money in all of the sectors right now.
Is it bad news for the U.S. dollar now that Russia will accept yuan for its oil sales to China?
That is the one area that I am not particularly bullish on. If you look at a long-term chart, the dollar looks like it has made a double top. And if you look at the yen and possibly the euro, the yen appears to be making a multi-year cycle bottom. It's kind of traded back and forth on either side of the 200-day moving average. It broke above it, came back down and tested it. On that day that the Bank of Japan tried to intervene and push the yen down, it tested that 200-day moving average, and then just a rocket shot launched to the upside. So I think the yen is bottomed, and now I'm looking at the euro, which everybody expects to collapse, and it looks to me like it's doing the same thing. It's churning around that 200-day moving average, and I expect the euro is probably going to put in a multi-year bottom here also, which should mean that the dollar is probably topped and will be heading back down.
What kind of influence will the referendum have in the UK where they're being asked to decide whether they should remain with the European Union? What will that do to currencies?
Well, I think it's going to be bad for the pound, but I don't know that it's going to have a big effect on the other currencies. And I'm not really that much of a currency guy. I just follow the cycles, and mostly in just the dollar and the euro. So I'm not really an expert by any means on the currencies, but from what it looks like on the charts anyway, it looks like that's going to be a bit negative for the pound.
The gold miners already have attracted a lot of attention, of course, the major players. What about the junior gold miners? Are they attractive?
I think, well, first off, I think we're back in the bull market. I think you can probably just, buy some positions and hold them for the next 4 or 5 years. That would be the most advantageous way to play the sector. If you want to take advantage of the capital gains tax as opposed to earned income tax, you could just buy and hold. And I think that probably the biggest gains will come in the junior miners. I expect they will. The majors may outperform here at the beginning, but by the time the bull market is over, and I expect this to last at least another 4 or 5 years, I do expect the juniors will probably significantly outperform the majors.
Are people sitting on their panic buttons right now, just bailing out of a lot of things, not knowing where to go?
I do see that, and I think a lot of people are assuming that stocks are in a new bear market, and I'm just not really in that camp. I've seen the market come down and test that 800 or 1812, 1825-ish level in the S&P. The first time was in October of 2014, and it came back down again in, I believe it was January, and then we got that, I guess it would be a triple bottom, earlier this month, and it just looks to me like that level is going to be protected. If that breaks, there's really no support under the market until we get down to 1600, 1550, and if that were to occur, then the Fed's got a huge mess on their hands. That's going to be hard to clean up, and it's going to be very tough to turn that market back around. So I'm of the opinion, and the buying pressure over the last 6 days has been one for the record books. So I'm of the opinion that we may very well have formed that 7-year cycle low that I'm looking for. I really did want to see it get down and test 1600, but it just may be that they are not going to allow that support zone to break, because if it does, it's going to be very hard to turn the market back around.
We'll have more with Gary Savage right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Gary Savage. Gary, in Japan, I've heard that the sale of private home safes has skyrocketed. Some places you can't find them anymore ever since the Japanese government introduced negative interest rates. People are hoarding cash, and I don't think that's the effect they intended at all with negative interest rates, was it?
No, that is just ridiculous. Who in their right mind is going to loan bankrupt governments, pay to loan a bankrupt government your money? That's just insane, and that's the kind of crazy stuff you see at the top of bubbles, and I think the bond market is probably the largest bubble maybe in history. This has been a 30-year bull market, and it's ending with people just doing completely irrational things.
And of course, the central bank in Canada and the U.S. Fed, they've hinted, perhaps we could bring in negative interest rates. Would we see the same kind of financial disaster here if they do that?
I think we would. There's no evidence that negative interest rates are going to improve the economy. Central banks, they're stuck in this Keynesian mindset, and all they know is to print money, and so that's just what they're going to do. And over the last 15, 16 years, that has tended to be pretty bullish for pretty much all assets. That money has to land on something, and on average, it just kind of lands on everything. So if central banks are, escalating the currency wars, then I would expect all assets to go up.
And, of course, with negative interest rates or interest rates around zero, we have governments decrying the fact that people aren't saving enough and that they've run up record high personal debts. And yet, how does that help change that situation?
Exactly. The way the system is supposed to work is you save money, you get a decent rate of interest on that money, and then borrowers can borrow your money to start businesses and and create productive capacity, but the Fed has and all central banks have got this backwards, and they have they're penalizing people for saving, and that's just not the way the system is supposed to work.
What about Donald Trump calling for an audit of the Fed?
I don't think it's ever going to happen. Politicians are just never going to give up their power, and same with the Fed. And so, good luck with that. Probably not going to ever happen.
Have you paid attention to the fiscal policies of the major candidates running, to get the candidacy to run for president? Who has got the best financial policy?
Well, I got to tell you, Jim, I hate them all the same. Politicians are, the only difference is who they pander to get their, their election money. But, once they get in office, they all do the same thing. So I don't pay a whole lot of attention to them. Nothing ever gets done. One thing I will say is that Donald Trump has his own money, and he doesn't really need to take lobbyist money. So in that sense, I guess you might maybe give an edge to Trump that maybe he could get something accomplished, but I don't have high hopes.
Well, he keeps saying I'm a great businessman, but he had to declare bankruptcy 4 times. A government can't do that.
No, the government has a printing press, so it's pretty hard for the government to go out and declare bankruptcy.
What kind of a policy do you think would work best to make sure that America's economy keeps humming? Because it really is the economic engine of the world, no matter how many arguments people make against it.
Well, history's been pretty clear. When we get into a situation like this, if you can allow the system to cleanse, and that just requires 2 or 3 years of really tough times. But once you cleanse the system, then the countries that have done this, when they come out the backside, then those countries have grown at just tremendous rates. But we have decided to go down the path that same path that we chose during the Depression, same path that Japan has chosen. And so what you end up with is 20 or 30 years of just stagnant growth. Not much gets accomplished. And, Japan it's been 30 years and they're still stuck in it. So, the problem is that politicians can't get elected telling the people the truth that we just need to suffer through, a really hard recession for 3 years so we can cleanse the system and start over. Nobody's going to get elected telling people that. So, I don't have high hopes here either that we could actually do what needs to be done to cleanse this and start over.
Some critics have said the U.S. really wants to start some kind of a war with China or Russia just to deflect the fact that the economy is headed for bad shape.
Well, that has been the history of politicians over the centuries is when they can't fix the problem, then they look for somebody to blame for the problem, and usually you'll end up going into war, and that's how the Second World War started. The First World War, we racked up a lot of debt, and we didn't really fix the problems, and so economies, especially in Germany, were really suffering, and when people suffer, they look for somebody to blame, and so if we're ever going to have World War III, probably sometime in the next decade would be the most likely time for it. I hate to say that, but that has been the history anyway of the world.
Well, China has just fired their head stock market regulator. Is that going to change anything?
No, I don't think so. I think China will just continue down the same path that all these central banks, they print money and they hope they can cure the problems by printing money, but in the end it doesn't really work, and eventually it's just going to create massive inflation.
You said you had a lot of hope for biotechs this year. What about other technologies? Drones seem to be everywhere. We had a drone fest just here in Vancouver.
I do. I like the biotech sector the tech sector in general. If you look at a long-term chart of the NASDAQ, we had that top in 2000, and then we've had a 15-year consolidation phase, and we just retested that top. And I've mentioned this before in my newsletters, that the bigger and the longer a consolidation is, the further a market will run once you break out of that consolidation. So we've got a huge consolidation in the NASDAQ that I think when it breaks out, it's going to go a long, long way. I think it'll be driven by biotech, and we have an even bigger consolidation in the silver market. That market has been consolidating for 35 years, I think. So when silver breaks out above that $50 level, watch out. Who knows how high that thing can go.
I was just thinking back to the 70s when the Hunt brothers tried to corner the silver market and how silver prices skyrocketed, and people like dentists said, well, we have to charge you more for your fillings. But when the price of silver went down after that, the dentists didn't decrease their prices.
Oh, yeah. Yeah. The one thing about silver is it's kind of price insensitive. Most of the industrial uses for silver use such a small amount of silver, like, say, in a cell phone or a computer, that it really doesn't make any difference whether the price of silver is $10 an ounce or $200 an ounce. It's not really going to significantly impact the price of that end product. So, that's another factor in favor of silver that, unlike oil, when oil or gas gets to $150 a barrel or $5 a gallon, then people just start using less of it. On the other hand, for silver, if silver goes to $200 an ounce, I don't think it would really impact the amount of silver that industry would use, because, like I said, it's just such a small amount that is used in these products that it's kind of price insensitive.
Gary, thanks a lot for chatting with us.
Thanks for having me on, Jim.
My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.